Welcome to this channel Debasis Puja Mandir. Today we're covering the new tax system in India.
All right, let's talk taxes. For more than 60 years, India's tax system has been built on one single law. Well, that's all been thrown out. A brand new law, the Income Tax Act of 2025, is here. So today, we're going to break down exactly what this massive change means for you. So you hear new tax law, and you probably think, okay, what's changing this time? Well, let me be clear, this is not just a little tweak here or there. We're talking about a complete teardown and rebuild of the old 1961 Tax Act. And yeah, it's going to affect pretty much every single person and company that files a tax return. You know, the old tax code was complicated. It was like this giant, tangled ball of yarn with 60 years of rules, amendments, and exceptions all knotted together. The whole point of this new law is to just cut that knot. The goal is a cleaner, more streamlined system that, fingers crossed, is a whole lot easier for all of us to figure out. So it really boils down to two big things. First, simplify the tax code, and second, enhance compliance. The thinking is pretty simple, right? If you make the rules easier to understand, it becomes way less of a headache for people to actually follow them and pay what they owe. That's the hope anyway. Okay, so let's get right to it. We'll start with a question that's probably on everyone's mind. How is this going to affect your money? What does it mean for your wallet? All right, first things first, and this is the big headline. For the upcoming financial year, 2026-27, the income tax slabs and rates, they're staying exactly the same. Yep, you heard that right. No changes to the percentages. So whether you use the old system or the new one, the rates are what you're used to. But, and this is a big but, the real changes are kind of hidden in the details. And here's one of those crucial details I was talking about. This new regime you're looking at, well, that's now the default for everyone. You're automatically in it unless you choose otherwise. Now, you can still go back to the old system with all its deductions and exemptions, but you have to actively opt out. It's a pretty clear signal that the government really wants to push people towards this new, simpler setup. Now, look at this number, 12.75 lakh rupees. This is probably one of the biggest, most talked about parts of the whole new act. Why? Because under this new default system, if you're a salaried individual, you can earn up to this amount and pay absolutely zero income tax. No, that's not a typo. And it's all thanks to a clever mix of tax rebates and a bigger standard deduction, which we're about to get into. So how do you get to that magic number? Well, a huge piece of that puzzle is the standard deduction. Just think of it like a freebie, a flat discount on your taxable income that every salaried person gets, no questions asked. And under this new regime, that discount just got bigger. It's been bumped up from 50,000 to 75,000 rupees. So right off the bat, you've got a bigger chunk of your income shielded from tax. The new act also gets really specific with some new tax exemptions. It carves out relief for some very particular situations. For example, if you receive interest from a motor accident claim award, that's now completely tax-free. Same goes for disability pensions for armed forces personnel. These aren't broad changes, but for the people in these specific groups, this is a really big deal. All right, so that's the story for individual taxpayers, but what about businesses? Well, the changes on that side of the fence are just as big, maybe even bigger. Let's dive into what's new for companies. Okay, for businesses, one of the key things to understand is a change to something called MAT, or Minimum Alternate Tax. Basically, you know how companies can use a bunch of deductions to lower their taxable income, sometimes even to zero? Well, MAT is like a safety net. It's a minimum tax they have to pay on their book profits, no matter what. Think of it as a tax floor. And guess what? That floor just got a little bit lower. The MAT rate is being cut from 15% down to 14%. Now, I know what you're thinking, 1%, what's the big deal? But trust me, when you're a huge corporation dealing with massive profits, that 1% drop is a huge deal. It's a direct tax cut that can free up a ton of cash for things like new investments. And these changes aren't random. They're very targeted. You can see a real push to attract foreign money. For instance, non-resident Indians, they're now completely exempt from MAT. But check this out. The biggest carrot being dangled is a massive 20-year tax holiday for foreign companies that build data centers in India. I mean, that's a seriously powerful incentive to bring that digital infrastructure onto Indian soil. Okay, so we've talked about personal taxes and business taxes. Now let's get into the nitty-gritty, the actual process of filing your returns, and perhaps more importantly, what happens if you don't. Here's some genuinely good news for a lot of people. The filing deadlines are getting more flexible. Salaried folks, you're still looking at July 31st, but for businesses that don't need an audit, you now get an extra month of breathing room, all the way to August 31st. And for everyone, the final deadline for a late or revised return is now March 31st. A little less pressure, which is always nice. But honestly, this next part might be the single biggest philosophical change in the whole act. We're talking about the decriminalization of many tax offenses. The whole mindset is shifting away from the threat of jail time and more towards financial penalties, fines. The idea is probably to unclog the courts and make people more willing to come forward and settle up if they're not terrified of being locked up. So this new system is all about making the punishment fit the crime. If the tax evasion is under 10 lakh rupees, there's no more threat of prison. It's a fine, and that's it. Jail time is now reserved for the really big, serious cases of evasion. And even then, the maximum sentences have been shortened. It's a much more tiered approach. And speaking of encouraging compliance, check this out. The tax on what's called unexplained income, that cash or those assets you can't really explain where they came from, that tax has been cut in half. It's going from a steep 60% all the way down to 30%. The logic seems to be that a less painful rate might just tempt more people to declare that hidden wealth and bring it out into the open. Okay, that was a lot to cover. So if you're going to remember just 3 things from all of this, let it be these. 1. For most people, your tax rates are the same, but the new default system means you could pay less tax overall, with up to 12.75 lakh being tax-free. 2. The whole approach to penalties is softer, focusing more on fines than jail time. And 3. You've got more breathing room to file your returns. Got it? Good. So at the end of the day, the stated goal here was simplicity, to make the whole tax system simpler and fairer. But that leaves us with the big question, doesn't it? Will making things simpler and will lowering the penalties for getting it wrong, will that actually convince more people to pay their fair share? I mean, that's the multi-billion-dollar question, and honestly, only time will tell.
So that is the total information of new tax system in India. Please like and subscribe this channel.